Okay, so let's look at how a weak high comes into play. So if you look at these sessions here in the ES, see this top of this single prints right here? Okay, that makes this high weak because what happened was basically it filled the single prints. It only missed by a couple of ticks. And so clearly that is a rejection of that area, but it's an extremely nuanced area right here, right? Who's selling at that area, right? People who know the profile. It may just be self-fulfilling prophecy because you can see how the market is pushing up against where value starts. So those single prints are right underneath the value area. So it just makes sense that the market would sell off there, but it's a very, very nuanced level. It's not something everybody's looking at on the charts. And thus, because the market backed off from there, it makes it weak. So you carry that reference forward as weak. Now look at this session here, the next session, 714. It tests this area again. And so because this area here is weak, we know that the potential is for it to break. So using the signposts ahead, this is a perfect example of how the application of putting the market profile into real life application. Look at where there's a VPOC here. There's a virgin point of control right here. Right? Virgin point of control is right there from 710. So this is the obvious area where the market should get pulled to because this is what we would call like a high volume node. And right here at the 63.13, you can see here. So long futures here, average of 63.1360. I had some at 13 and I think some at 14. And I'm going to be targeting that area. And what I'm going to do is because if this doesn't happen, I guess in this one session, I'm going to put this limit order out here right at that VPOC. So that virgin point of control is 63.2350 and we know that it should be tested. So what I'm going to do is I'm going to go up here to 63.2350 and I'm going to put the order right there. Okay, so now coming back to my computer after about 7 hours, if you recall, I put on that futures trade and I was saying we're going to go to the POC, and lo and behold, look what happened. We went to the POC, to that VPOC. That VPOC was tested. Now, understand that because this happened in an overnight session, it does not count towards repair of that virgin point of control. That point of control is still going to be a virgin point of control, but you can use it as a target even in an overnight trade. And I didn't know whether or not this was going to happen overnight or tomorrow, but the odds are just very, very strong that if I got long futures right where you saw me get long at that 63.13 area, right, because this high was weak, right? We know that it was a weak reference, especially because it's just very, very close to this high. We know this high is weak. Why? Because it's very nuanced, as I was saying, right up against the top of the single prints. Weak highs generally get taken. And you can see here, this is the futures trade right here, right? So the contracts went out. The limit order that I put out got hit, and you can see the profit there. So probably many of you are asking yourselves right now, okay, but what would you have done if it had tanked overnight, or where would your stop be? And I understand that thinking, but you'll come to learn as you become much more seasoned in the markets, and especially if you want to do these types of market profile driven trades, that that's not really a smart way, for lack of a better word, or productive is really a better word I should choose. It's not really, a productive way to think about it. It's not going to serve you well over time. So one thing you'll notice about this trade is that my size is small. For me, this is small. 5 contracts is small. It's $250 a point. And so I'm willing to weather the storm if we were to open on a gap down or it didn't, But what we're doing here is we're playing odds, and the odds are just very, very strong that POC, that virgin point of control, is going to be tested. And so probably what I would have done is, if the gap down was very severe, I would say, okay, I would just take the loss tomorrow morning. But if we were trading within the same range, let's just say that, this is where the entry was here at the 63.13, right? And let's just say that this was the overnight low, but we were trading here. That's fine, because think about it, nothing's happened. I can use the signposts of the profile to tell me where I've traded. And look, this is half back. That little dark yellow line is the midpoint of the range. Notice that the overnight activity didn't even come to the low end of the range. Also, I should note, we don't know if this will be like this, but that's a 45-degree line low. So that actually would embolden me, because we've talked about that earlier in the course about 45-degree lines and how they generally are secure lows. And so if I saw that, if that pattern was to persist into the open, it would give me a lot more confidence to say, okay, that low is probably secure, and we're going to, even though we didn't go to that virgin point of control overnight, we're probably going to get there at some point today, right? All we have to do is trade above this level, and you can imagine there's probably lots of buy stops. And I don't know if this was news driven or not, to be honest with you. It may have well be, but it doesn't really matter, because what you'll come to find out over time is that the structure of the market really sets up moves that may look on the surface to be triggered by news, but the reason those moves go so hard is really because of the underlying structure. So whether or not something happened here on this spike news-wise, you can be sure that the reason that it made such a big, spiky, skinny move up here is because of the pent-up pressure of what we talked about here, is because the high was weak, basically. All right. And so, and it worked out well, obviously, as you can see, that was a 10-point run. And I wasn't even really paying attention, right? I just came back to the computer now about 7 hours later to see if it had hit, and so that I could finish the video. But you can see it worked out just fine. So just to recap, just to be very, very clear, remember that poor high is not the same as weak high, and poor high needs to be repaired, but it's probably not as powerful as weak high in terms of breaking through, right? Poor high is a deficiency in structure that you can trade directionally because you assume that the market needs to print excess to repair it, right? So when you have a high without excess. But a weak high is an area that has been weakened because of multiple tests, or weakened because it was a test like here of an area that's very, very nuanced. And that's just basically not going to hold. The general rule of thumb is you just want to ask yourself the question, what type of seller is selling here? That's always been very helpful to me. When I see something like this, and I know that it ties in perfectly with a value area low, which is really what it is. I mean, I've been talking about referencing the top of the single prints, but look at the value area low. It's just a couple ticks shy of the prior day's value area. So it just makes sense, right? This is a very, very nuanced reference. And again, you got to ask yourself, what kind of traders are selling there? Are those really strong hands, or are those weak hands? And weak hands doesn't necessarily mean that they're nervous. Weak hands often translates just into momentum-based or very, very short term. And whenever you find references on the profile, and the profile is great for this, right, is in identifying references that are controlled by factions that are very, very short term. This knowledge is extremely valuable to you, because when prices go back to that area, the odds are very, very strong that they're going to break when they get to those areas, because the traders that were involved at those areas were really just very momentum based and of the short-term variety. Hey, this is Peter from ShadowTrader.net, and I just wanted to thank you for watching this video. If you enjoyed this content, please hit the like and subscribe buttons. And if you'd like to trade live with me every day in my weekly options advisory, then check out the link in the description below. I wish you good trading, and I'll see you in the room.